I think that in terms of what happened in the U.S. when the housing crisis happened, that's not going to happen in the Philippines. The banks are just way too strict on giving out mortgages. We would never have anything like that in the Philippines. It's super safe here. They basically only give mortgage out to people who can afford it.
Hi everyone, we are back for another deep dive on the property market and property investing. And for those of you who are invested in property stocks, we have the CEO of Lamudi Philippines, Ken Stern, over 15 years experience in the property markets, where he's going to share his insights to all of us so that he can help you make the right decision when it comes to your money. So Ken, how are you? How's the entire lockdown going on for you?
It's been good so far. I mean, I took over the job with Lamudi during the lockdown, so that was in September. So that's been a great transition so far. And yeah, we've been working from home ever since March. So I have a new baby that's 9 months old, so lots of time with her, which is great. So yeah, overall it's been okay.
Glad that you're doing well and glad that you are taking this new responsibility. So I'll get right straight into this. How's the property market in the Philippines? Because when the lockdown started, a lot of people were a bit pessimistic about it, but you had a lot of people saying that property managers or developers are good in handling supply, which will also protect prices as well. 7 months after this, or 6-7 months after the lockdown, where are we right now?
Real estate has stayed pretty resilient throughout the entire lockdown period. Pricing hasn't really moved that much. We'll go a little bit further into areas where we see opportunity, but as a whole, it's been quite strong in the holding power of most asset classes. I think there are opportunities out there. So, obviously, if you speak to a good broker or certain developers, you'll find those deals, or even the banks with foreclosures. But we have seen some interesting trends recently that probably popped up because of the pandemic. Shifts to new markets, shifts from certain demographics into buying now for the first time. So overall, a strong industry. Things have slowed down, obviously. When the pandemic first hit, our transactions did slow down, probably due to people wanting to hold cash, not knowing how long this might last for. Also, if you had a transaction pending or about to close, government offices, banks being on skeletal force, that slows down a lot of transactions as well. So a lot of pent-up demand has happened, but that seems to have loosened up since the GCQ and now the phase 3 of what is the GCQ. So things have sort of loosened and eased into business as usual in a way. So transactions are happening more fluidly, more back to normal than before. So it's just, I think, really a matter of time before we're back to pre-COVID numbers. Lamudi's actually kind of lucky that we've been on the digital space ever since. So we're actually back to pre-COVID numbers, which is great.
You mentioned that there are some shiftings that's going on in the property space. Can you tell me and elaborate on which are the areas right now that are not as good as what it was in 2019, and which are the ones that are emerging?
QC has been the most searched property location for us. So very popular for buyers and renters right now. Not surprising, as QC is known for residential. So I think people are looking for possibly more space, more bang for their buck. So there has been increases in page views and leads for the QC market. Makati leads for buying transactions improving in Q3. So a lot of pent-up demand happening and then loosened up in Makati. So as they gradually reopened, we saw a surge in Makati, possibly as business started to open up, people need to go back closer to work. On the commercial side as well, people looking for more space, flexible options. So I think that pent-up demand, especially when the GCQ happened, that led for the surge into Makati. And then the last main trend I think we saw really from the pandemic is affordability playing a major role into the buying process now. So people really looking for good deals, motivated sellers, foreclosures being a popular search now, provincial land. So I think affordability, so those dime a dozen type of deals, people who are highly liquid are snatching them up.
You mentioned about people going outside provincial land. Is there an area that's searched more over the past few months, as we've been also seeing a trend that since I can work anywhere as long as there's internet, might as well do it somewhere where I have a bigger space also.
In the Visayas and Mindanao, Cebu is by far
Oh.
our biggest provincial location. So Cebu's had a ton of page views and leads generated there. Surprisingly, in Luzon area, Antipolo has had the most increase in page views and lead for us. So that's been an interesting trend that we've seen. I suppose it's a mix of both residential and commercial, in the sense that people are looking for those fringe cities. Possibly they want to be close to their family in Quezon City. Antipolo is a possible fringe there, or perhaps they have a business in Quezon City and they're looking for more warehousing space or more land to build. So Antipolo being a viable option, especially with a lot of infrastructure being built there. Calabarzon, definitely still high on the list. So, your Cavite, Laguna, southern areas still, especially for land and commercial spaces for land, a top search on the website.
I guess it's also the view. It's something that you can get, that people are appreciating nature more now than ever. That you have a larger space where you can walk, and then it's easier for you to jog. It's easier for you to see the sights.
People are definitely valuing space, views, even with condos, amenities, balconies, Wi-Fi connection. I mean, these are things going into people's minds now. Just to give you a quick number, Antipolo had 27% of our page views for land in the first half of 2020, and 32% of the leads for land in the first half of 2020. So
properties that in the areas that you mentioned, from QC, Makati, then the fringe areas from Antipolo to Calabarzon, during this entire pandemic, have we seen prices go up in those areas, or have they maintained, or are they holding much better than the other areas that you did not mention?
pricing, to be honest, for the most part on the site has remained pretty stable. There has been increases in certain areas in terms of page views and leads, but in terms of rental and buying prices, it's been pretty stable. Lamudi's data is interesting because it's direct from the property seeker. So unlike some data you might get on the property market from banks or and other resources, Lumudi, we're pulling all of our data directly from the people searching it. So it's really based on buyer trends, what people are interested in. So something interesting is that our high-end properties had more page views than pre-pandemic. But in terms of leads generated, our affordable market had more leads generated than pre-pandemic. So people are interested in dreaming, seeing what they might be like in a high-end property, just looking, but then actually inquiring about an affordable property, being more realistic in terms of the inquiries. So, I think that the trends that we're seeing are, interesting, but important to note that our data is all coming directly from the property seeker.
For Metro Manila, what's getting a larger search right now? One-bedroom condos, two-bedroom condos, studios, or the larger three-bedroom units?
During the pandemic, we've seen more increases, or a bigger increase in houses for page views. Secondary would be condos, and third would be land. So I think more people are actually looking to be in a horizontal type of asset, possibly more long-term investment. We have seen a shift from buyers of the millennial demographic. So more millennials interested in buying now than before, whereas in the past it was more rental for them.
Wow.
Possible reason would be that they're not spending on vacations right now. Millennials are known for spending, at the present. They spend on restaurants, travel, leisure, hotels, things like that. Now that they can't do that anymore, they've got some savings. Most of the millennials have moved up in the workplace, become more leaders or managers, so they have more disposable income, and they can't spend it, like they would before. So I think that that's sort of a long-term investment option has now shifted towards real estate. Really, they're thinking about possibly starting a family, or they have a family, and now they're putting that money towards real estate. Whereas in the past they would have gone towards the hospitality industry.
Follow-up question: in terms of buying, a lot of people have been asking this the past few months. Is it relatively safe to buy now? They're thinking of timing it, that it might be cheaper a year from now, it might be cheaper a few months from now. What's your advice for people who have that mentality?
I think real estate is not as volatile as some of the other markets you might get into. So the best time to buy real estate in the Philippines was 70 years ago. It's not going to get, I don't think we're going to see huge dips in prices. Possible some plateauing in certain areas, and obviously you get the motivated seller in certain areas as well for certain asset classes and certain products. But as a overall market, 7 months into the pandemic, it's still held pretty strong, especially if you're looking for any sort of end use type of investment where you're actually going to live there. Your mid-range product or your high-end product is not really going to change that much. Most of those homeowners, are highly liquid, aren't looking for a rush sale or anything like that. So, the prices really won't change that much. I think you can find deals in certain areas, though. Not to say that you can't. So if you're an aggressive investor, you're more, you can take on more risk. There are certain sectors where you can buy cheaper now than before and take advantage. So obviously the POGO sector has been hit massively. So mass exodus of, Chinese housing. So in the commercial side, obviously e-commerce has taken a huge popularity increase in everyday life. Most people who weren't involved in e-commerce before pandemic are now e-commerce users. So those are your fringe cities, your Antipolos, Calabarzon, right before it goes to your house, it stops there and is transferred.
Are there any areas that demand has softened because of Pogo? Because mainly when people think about Pogo, they think about Makati and the Bay Area.
If you're looking just purely on raw data, all the cities have had an increase. So if you look at Makati specifically, where you mentioned Pogo is a main tenant of Makati, we have a 40% increase in page views in Makati. The other major cities, we have Quezon City, Cebu being Pogo high areas, all also increasing. Quezon City 57% increase, Cebu 21% increase in page views.
Are they also very conscious on the developer? Do they search first about the name of the developer first, then the city, or they look at the city or the type first, and then regardless who the developer is, that works already for them?
We have seen these developers start to branch outside of Metro Manila. You have Rockwell, who's now gone into the south. Ayala's had a big presence there for a long time. Same with Mega World. And those increase, that interest has also increased. I mentioned land and house and lots available outside of Metro Manila has seen an increase. So you can account those to probably many major developers. It's a mix, people looking for secondary deals and primary deals, but unfortunately I don't have the data on exact numbers there.
In terms of the business spaces, how has it gone also? How big has been the demand? How has work from home, social distancing, and some outlets also not operating over the past 6-7 months affect prices and supply and demand also?
For your office rentals, if they've been hit hard from April, transaction of commercial properties were about 7.3% of our leads. That's a decline from January of about where we were at about 13.5%. But now in July, fast forward a few months after lockdown, we're back to pre-COVID numbers. So we're at about 13% in terms of transactions for leads generated for commercial properties. So that's roughly pre-COVID numbers, slightly down, but right about there. I think an interesting trend is that commercial spaces now is actually a residential space. So what used to be commercial is now actually looked at as a residential since it's work from home. So houses in April were about 33% of our most inquired, and condos about 30% of our most inquired. And in July, they're about 40%. So they have an increase in houses and condos. So those are like your ready to occupy residences, not your land, but the ones that can be very easily from day one turn into a home office type of setup. So those have had about a 10% increase. So I think people are looking at sort of the long-term investment of working from home and inquiring more and looking more at places that are already built. We have seen definitely an increase in demand for amenities. So swimming pool, gym, alarm, home security, and of course, Wi-Fi and balconies have been the top searches for amenities. So ranging from about 5% required to about 15%. Your 15% is being like a balcony or a Wi-Fi connection as a must-have for a move-in ready space.
I'm so curious about this because tourism is virtually non-existent for the past months. How has this affected units that have been bought out for Airbnbs?
There was a shift from people looking to buy more pre-pandemic to actually rent more. So there has been a 1% increase on the rental side. So more people are interested to rent, but 1% increase is not drastic. So it's actually held pretty stable, I would say. The mix of people who would have bought pre-pandemic to buying now versus the people who would have rented pre-pandemic to now, basically the same, but a slight shift towards more rentals than more buying.
I'm so curious how this impacts also commercial spaces. I don't know, because people are not really going out. All of the transactions, as what you've mentioned, are majority online. Has that affected also rental rates on specific areas that are highly connected to commercial?
If you look around the Philippines, obviously, many restaurants have started to close down. There's foreclosures happening as well. So there have been shifts in the retail space sector. So if you're looking for investments, retail space is probably not the best investment right now. But if you're aggressive and you're optimistic about the market, there are going to be a lot of foreclosures in the market that you can probably scoop up right now for prime retail locations.
You opened up something very, very interesting. Being someone who has been exposed to the real estate market for 15 years now, for people who would want to at least dip into foreclosures, what should be, at least if you could give them some strategies on how to go into this or at least excel in it, how do you think they should go with that?
Foreclosures is a highly risky, asset to invest in. Don't look for quick gains. Obviously, you're looking for the very, very, very long term. I would stick with cities that areas with infrastructure are going to play out a little bit better. Warehousing is going to be there, retail is going to be there, commercial spaces are going to be there, just a matter of when.
In terms of people who want to get property, not as something that they will use, but something as an investment, what would be a more prudent way to allocate capital right now? Would it be on properties that will give them appreciation or focus on our rentals as of now?
If you're looking for a safe investment, I would say mid to high mid, trusted developer, CBD, still going to be a safe investment. Those are still the major work hubs. Things will eventually always go back to CBDs, whether it's work from home or not. The hubs will still be there. So, and people need to be close to to work, to food, to hospitals, to schools. If you have the money for it and liquidity for it, high end always has great holding power. So there's always a market for high end. It's also the least amount of supply. So
you mentioned that millennials are shifting into buying more now than renting. Is that a large chunk of people that's more focused on property now, or is it still the Gen Xers? Or since the Gen Xers have already property, millennials who don't have properties right now are the ones getting the bulk of the transactions?
It's hard to say. This is all just presumptions, but I would say it's most likely first-time buyers or first-time renters. That's obviously an assumption. I'm just basing it on trends that I've seen.
For example, you have someone who has 14 million pesos. What would be a better approach? Buy a condo unit that's 2-bedroom worth 14 million, or buy 2 1-bedroom units that's 7 million each?
Well, what I would do is different than what I think someone should do. But I think if you're looking for return on investment and to make money in real estate, definitely the 2 1-bedrooms would make more sense. Rental income is definitely an added benefit to real estate. I think the most interesting thing about real estate is that you can earn twice from it. You get capital appreciation and you get rental income. So if you have a 2-bedroom and you live there, you can only earn from capital appreciation. Whereas if you have 1-bedroom or one bedroom unit and one bedroom unit for rental, you can live there, so you get capital appreciation from one, and the second one you get rental appreciation plus capital appreciation. So, and then eventually you can flip both and buy more. Because of the pandemic, developers have been very aggressive with offering very nice financing terms. to most home buyers. So you could probably get 2 1-bedrooms, put a down payment of like, less than 5%, pay the rest of it off over 3 years, and flip it before you even take a mortgage. So it's very interesting what's out in the market right now.
Are you the type of person that wants to put lesser down payments so you can leverage more, or do you highly suggest that people put a larger down so that the interest payments will be lower but they leverage less?
The best thing to do is to pay off the mortgage as fast as possible. That is, the end goal of it. Obviously, the longer you take to pay off the mortgage, the more interest you pay, and then the banks win. So it's important to note that not every bank allows you to pay off a mortgage faster either. So when you do get your mortgage, make sure you ask that question: Is there prepayment penalties? If a bank charges prepayment penalties, then you'll get charged penalties for paying off your mortgage faster. But many banks don't have prepayment penalties, so make sure you get a mortgage from one of those. But you have to also balance it. Like, if you have a certain lifestyle, if you have a family, you don't want to sacrifice too much in your lifestyle just to pay off a mortgage either.
And to make it super practical to today's pandemic, instead of buying that tent rubber shoes that you're not gonna use anyway, so might as well put that into something that will help you later on. A lot of people are fearful that there might be a bubble based on your data. Do you think that's happening? Is it possible? Will the market crash?
I think that in terms of what happened in the U.S. when the housing crisis happened, that's not going to happen in the Philippines. The banks are just way too strict on giving out mortgages. We would never have anything like that in the Philippines. It's super, super safe here. They basically only give mortgage out to people who can afford it. So banks are super secure here. So I don't see any bubble happening in terms of that. Property prices are, we've been in a 7-month or 8-month pandemic now, more or less. And basically prices haven't really dipped that much as a whole real estate market. You get a motivated seller, maybe an OFW who lost a job, moved back to the Philippines, needs to liquidate. That's a factor to sell your home very, very fast, or an investment home very fast. You get a good deal there. But as an entire market, that's not happening. I think the real estate market will probably stay fairly strong throughout this pandemic. A lot of the primary market is still a big part of the real estate industry here. Developers are, have probably the best holding power because they're so diversified. They also own a lot of the banks, a lot of the infrastructure here. So they haven't really dropped their prices that much either. Don't wait for a bubble to invest in real estate because if you wait for a bubble, you might be waiting you might be waiting for a long time. That'll never happen.
Got it. Final words for people who want to invest in real estate. What do you want to impart to them?
Go on Lamudi. Do your due diligence. Like anything you invest in, especially real estate, which is probably going to be the biggest investment you make in your life. Take the time to understand what you want, what you need, what others might want and need if you wanted to understand the value of your resale down the road. Understand all the financial instruments involved with it. So understand the mortgage process, understand all the closing fees, like make sure you have enough money because real estate could be a very expensive investment and you can incur a lot of penalties if you do it wrong. So make sure you talk to the trusted people as well. So get in touch with a good broker, get in touch with a good bank as well. So yeah, it's not like a pair of shoes where you're buying 10 of them a day type of thing. This is a super long-term investment that can change your life and change your family's life and give you wealth for a very long time. So take the extra time to research. Lamudi has hundreds of thousands of listings on there, thousands of brokers you can contact. Go through at least a couple hundred of them. If you don't have time, at least a few dozen, and make sure you're getting the right information before you make your decision, and talk to the right people, and watch videos like this and more videos like you do on YouTube, so that you get all the financial information you need, because it's a big investment and you'll need to change your lifestyle for it.
Got it. And Lamudi is so interesting because there's so much data and there's so much even when you're at the safety of your home, you can compare different properties already. And I'm a big fan of Lamudi. So thank you so much for sharing your knowledge to all of us as well. So to everyone, if you guys have questions, put them in the comment section. We'll try to answer them in succeeding videos. And if you learned a lot from Ken, just put it in the comment section also. I want Ken, so we might have him back also for more in the future. So So there, thank you so much, Ken Stern, CEO of Lamudi Philippines, and to everyone. I hope you guys got a lot from this, and I hope you guys learned a lot, and I hope this video gave you enough insight so that you can at least take the leap forward for those who want to invest. And like what Ken said, do your due diligence. Don't just buy just because people on YouTube talk about it. Research, analyze, and study, because at the end of the day, when it comes to investments, the money that you make is proportional also to the amount of conviction that you have in it. Do never ever buy something with you going into it half-hearted. So it has to be something that you've studied very, very well. So that's it for now. Marvin Dermo with Ken Stern. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.
Lamudi, dyan ka mag-search ng mga bahay, ma.
Basta gusto ko sa Quezon City.
Dad! Daddy, gusto kang swimming pool! Gusto ko ng sarili kong kwarto, please!
Ikaw, Hana, ang gusto mo?
Umuwi ka lang. Hello, Ha! Nandito na kami. Wow, ang ganda, honey.
Lamudi, welcome home.